Well, hello everyone. Welcome to Getting Started with Technical Analysis. My name is Barbara Armstrong, and today we are talking divergences. And what does that mean? Well, if you don't know, you are about to find out. This is an introductory level class where we are looking at charts and we are looking at the things that some traders might choose to add to their charts to provide more clarity on what the charts may be telling them about what is happening with that particular stock and that particular company. If you are not following me on X, I invite you to do so. My handle, Barb Armstrong CS. Ben Watson will be joining us in the chat, and he is a friend and fellow coach. And you'll want to follow Ben on X as well, Ben Watson CS. If you've been to a live event that Schwab hosts, oh my goodness, can I speak today? That Schwab hosts for our clients. You'll have met Ben, and he is an absolutely wonderful coach. So just before we get into things, I want to clarify a few points. We're going to look at a lot of things and we're going to look at a lot of charts today, but know that all of the examples we're looking at are for general information purposes only, none of them to be construed as a recommendation on the part of Schwab or myself. Know that if we look at an option strategy, know that options carry a high level of risk and aren't suitable for all investors. Also, this is Getting Started with Technical Analysis, so technical analysis is our focus. However, Schwab doesn't recommend that it be your only means of investment research. It behooves us to be aware of what is going on globally in the markets, what's going on within our own country, both in the markets and politically. Tariffs, for example, have had a lot of impact on the markets and continue, to have the opportunity to influence the markets and particular stocks. And so we've seen some of that. So we want to take a well-rounded approach during earnings season. We want to be aware of earnings and how those can impact the price of a stock as well. We're using the Paper Money software application on the Thinkorswim desktop platform. It is a brilliant place to learn and to grow and to kind of hone your skills, become familiar with the platform and with the trading strategies that you might consider using. So today, I designed this class to be taught in about a 9-week rotation. I'm going to throw in 2 bonus sessions at the end of this. So next week, if you'll want to come back because it's kind of one of my favorite topics to talk about, and that is the 10 things I wish, or the 8 things I wish I'd known about trading and investing when I got started. So that will be a bonus session next week. And then the week after that, we're going to talk about Fibonacci's. So if you don't know what that is and you just like saying Fibonacci, you'll want to come and find out, one, how this tool is designed and how it works and how you might choose to use that in your trading. And then we'll go right back to the beginning. Now, if you have never attended this class and this is your first time, don't think like, oh, I haven't attended any of the others, so I guess I better just, hang up or come back at another time. I'm not assuming that you understand all of this. Like, each class is an entity unto itself. But last week we did talk about indicators. So if you missed that, I'll show you where you can go back and catch the rest of these sessions. Okay. And somebody's saying, I wish I knew about these earlier. This is my first time watching. And, I'm actually a student of this education. I found it back in 2011, and things have changed a lot. And this and the Getting Started with Options, I mean, these are the classes I would have loved to attend, had they been in existence then. And so now that you can kind of take advantage of it. So and because I think we have a lot of new people here today, along with some of what I affectionately like to call the usual suspects, just a minute, I lost my chat, like Mighty Mouse and Sharon and Jay and the rest of the gang. I want to thank you guys for helping bring this class to life. But if you are new, please type a greeting into the chat so that we can welcome you. And one of the things that I wanted to show you is that if you are new to these, you can come over to live webcasts, and it's just schwab.com /coaching. And I will put in a link here. Sorry, I'm getting kind of these wonky things happening with my feed. Let's see if this will work. Ben, can you go ahead and just put that in the chat? I thought I could do it easily, but according to my little system here, that's not happening. Okay. Okay, so yeah, if you go to these webcasts, schwab.com, and click on live webcasts, you can see the entire schedule. So if you come down to today, you know, earlier today we had getting started with options. Ben just wrapped up teaching a class on long options, which is buying calls and buying puts. And after this, we'll have Mike Fairborn talking about swing trading. And if you said, oh, I was at a live event and saw Ben Watson, you know, I'd like to see what else he teaches. You can pick by coach. And you can see that, you know, Tuesday mornings, he teaches a class on trading futures. Wednesday, he teaches a class on index options. And that's a really cool class if you haven't checked it out. And then when he's here, because he attends a lot of in-person events, he teaches a class on market movers, you know, kind of a recap of the week at 3:00 Eastern on Fridays. You know, and if you're a beginner, you might say, hey, I don't care who the coach is. You know, I want to see the beginner level classes. And you can see we've got a getting started with stock investing. Well, actually, that is now, let's scroll down on Monday, stock investing for beginners, getting started with options and technical analysis, and then a getting started with Thinkorswim. All right. Okay. So the other thing is, if you're new, and I said if you wanted to do some binge learning, this is where you're going to want to hit that subscribe button. And, you know, here's the getting started. So when you first come to the Trader Talks from Schwab Coaching channel on YouTube, if you come to playlists and then scroll down, the Getting Started series are closer to the bottom. You can click on View Playlist. And then you can see that, you know, we started back here with lesson 1, and then we just layered them on. So first one was the basics, and then we talked about trend and moving averages and floors and ceilings, or support and resistance. Interspersed are a couple. I'm doing a series of short videos on individual candlestick patterns. And these are like little snack size. And they're in 2 places. They're here because they're technical analysis oriented, but they're also, I have a playlist called Mini Sessions, Trade Management Mini Sessions. And if you come down to this Trade Management Mini Sessions, we have them grouped. So at the top in this turquoise is candlestick patterns, or in this green, I don't know what color we want to call that, shamrock. There's a couple on the power of compounding. And then we've got, you know, a bunch of example trading plans in blue. And then if you're new to the Thinkorswim platform, if you scroll down to the very bottom, in, you know, Mediterranean turquoise, there's a bunch of short videos on how to customize your monitor tab or the watch list or a chart, or there's a whole bunch of short videos there. So if you're new to these webcasts, there's lots of resources that you can take advantage to simply by subscribing to that channel, okay, which is a free resource. Okay, so on with our regular programming. Today we're going to look at 2 different indicators, and we're really going to focus on one because it's the concept that we're looking at. So we're going to define what a divergence is, and look at a bunch of examples on charts. And then we're going to look at both from an example trade perspective, how we can use this both to place a new trade, perhaps, and then how to manage some of the positions already in our accounts. So here's an example of a momentum indicator, and this is called the MACD, which stands for moving average convergence divergence. Sorry, I'm having trouble today with my drawing tool. So here is our MACD, and we see some things on the chart. These momentum indicators, like the MACD, moving average convergence divergence, we see in a bar underneath the chart. And we talked about this last week, but what it does is it takes two moving averages, a 12-day moving average and a 26-day moving average, and it kind of plots them together. And it oscillates from red, which is selling momentum, to green, which is buying momentum. And they call this the signal line here, or the baseline. Okay, and it's an indicator that some technical traders will use to confirm a trade signal. They'll look, and if they see something on the chart, they may look first to the chart, and then they might come down and look second at this indicator for confirmation. Okay, this is supposed to be the number 2. There we go. Okay. So, and that's a momentum indicator. Now, there's another type of indicator called an oscillating indicator. And an example of that is the relative strength indicator. And often with a relative strength indicator, they'll have 2 lines, and those lines will be at the 70 line, which means that it's an indication that things could be oversold overbought. So here's the 70 line. And then down at the 30 line, this can be an indication that things are oversold. And then at 70, it could be considered overbought. And so if somebody's looking at a stock that's gone up dramatically, and then they see this overbought signal, they might say, oh, maybe it's time, to take some of my profits. And so this is often not the first. They'll look at the chart first, and then come and look at this oscillating indicator, or an indicator like relative strength or the MACD, for confirmation of what they're seeing on the chart. All right. Okay, so that's the indicators. When do we get to the divergence bit? Well, the divergence bit occurs when you have something happening on the chart. Like we have on this chart where the stock is falling, but when we come down and look at the relative strength indicator, it's rising. And so we can see when we look at this, and we have a snippet of our chart here. But, what we can see is that this had been falling prior, and then it was continuing to fall here. And when we see this divergence, so here it's going down, and here this indicator is starting to go up, it can be a sign, and it doesn't always hold true, but it can be a sign that maybe the sellers are weakening and buyers are about to come in. And so we saw this divergence, and in fact, on this chart, then what happened is, the stock bottomed out, the downtrend was complete, and then buyers came in. And Scott, I didn't create these slides. I'm just the happy inheritor of them. So I don't know what particular stock this is, but we're going to go out and look at a lot of stocks where I'm going to pull up symbols, and it'll be very obvious what they are. And so we have 2 types of divergences. And so this is seen as a bearish divergence. And what do I mean by that? Well, what I mean is that on the charts, at the time, things are looking tickety boo, right? Like the stock is going up. Sorry, I keep forgetting to shake the Etch-a-Sketch here. So the stock is going up, and the bulls, which are, people who are anticipating that things are bullish or that the stock is going to go up, are pretty happy. But at the same time that this is going up, we see this appearing on our MACD, which is saying, hey, don't be so happy. I smell a pullback coming. And then did we end up with a pullback? What do you know? We did. And then was this a divergence here? No, this was it was downtrending and the MACD was pulling back. Okay. So the divergence happened here, and this was a sign that the winds of change, that this upward trend might be losing strength. And in fact, it did for a period of time. And then the uptrend continued. Now, if you're a long-term trader and you've bought, Coca-Cola like Warren Buffett did back in the day and intend never to sell it, you might not care about this. But if you're a short-term trader, looking to make trades, that or be in positions that might only last, 10 to 50 days, then this might be of great interest to you. Okay, so that's a bearish divergence. Trend is going up. Indicator is saying, yeah, I'd be careful. Oh, just a minute. There should be. Okay, and here's the bullish divergence, where we saw this coming down, stock coming, and this indicator is saying, yeah, well, I think the selling may be done. Okay. Yeah, so there are a bunch of different MACDs indicators, and it can be just two lines. I kind of like it when it shows up like the way it does on these charts, so you can pick whatever you like best. Okay, so let's go look at some charts. So the first one, let's look at SMCI, and we're going to look at some that, we're just kind of looking at historically what has happened. And so when we look at this, and let me just get rid of these drawings that are already on the chart. So when we look here back in this March timeframe, we saw a stock that was downtrending, right? Right. But when we looked at the MACD, we had a low, and then this had a higher low, where in fact on the chart, we had a low and then a lower low. So, and what this, the story this may be telling us with this divergence is, hey, this pullback, the sellers may be running out of steam. And in fact, it appeared that they did run out of steam. And then we had it break out above this diagonal resistance line. It came back to retest. Then it broke back above the 30-day. And now it's kind of consolidating. But it would appear this downtrend is now complete. Okay, and if we come up here and look at this, well, we had this high, and it's kind of come back again, but this is saying, hey, it's kind of going nowhere. And what has this been doing? Well, it has been kind of going nowhere, hasn't it? And so some might say that's a divergence, and others might say, well, it was higher and it pulled back. So I'm thinking it's okay. So they might say, well, I would draw my line like that. So there isn't always, going to be these divergences showing on the chart. Yeah, so when you look at this histogram, it says MACD histogram, and the 12 and 26 show the moving averages that they're using, and they're using exponential moving averages. So when you come to studies and edit studies, if you come here and you type in MACD, there's a plain old MACD. There's the histogram crossover, 2 lines, MACD with prices. I just picked the MACD histogram and I left it set up just the way, the way the defaults are. Okay. Okay. Just because somebody said my MACD looks different than your MACD. And yeah, you've got lots of choices out there. Let's look at Merck. Now, one thing we can look at too, just to stay on SMCI for a minute, if we look at this and we see, oh, I don't really see a divergence, then, that can be confirmation if we're saying, hey, this is going sideways. If I'm not seeing a divergence, maybe I see this sideways trend. I could, if I own the shares, I could sell a covered call, or I might want to do a short put vertical or something if you're familiar with various option strategies. Okay, so both having a divergence and not having a divergence can be confirmation of a different sort. Okay, so let's look at Merck, MRK. And so Merck, here's another example, and I drew it out on the chart where we had a stock that was downtrending, and yet this MACD, when we got to April 7th, said, hey, I see that, the sellers may be starting to wane and maybe buyers are going to start stepping in. And in fact, we have seen this pattern start to consolidate. Now, 1 week we talked about trend reversal patterns. So this stock has been downtrending, right? Sorry, I meant to. And so you might say, well, could this be setting up a double bottom type pattern or an inverted head and shoulders type pattern? It could be, but that pattern isn't complete yet. But, it has been downtrending and we haven't seen, a complete reversal of that pattern, but we're starting to see here higher lows and higher highs. Okay. How about NVIDIA? So with NVIDIA, once again, we had a low here and then a lower low, and yet on the MACD, we saw a low and a higher low. So when we look at this period of time, I may have to reboot my system. Sorry, I'm just waiting for this. Monumentally slow drawing tool to show up. Thank you for finally appearing. So if we look at this period in here, stock downtrending, MACD moving to the upside. And then in fact, we did see a change from this downtrend within a channel to something that many would argue is now uptrending. I'm not sure what causes the change in the color of the charts, Isaiah. That's a really good question. Ben, do you know? If not, I'll ask and see if I can find out, and I'll get back to you on that next week. Okay, but what we've seen is a change in this direction. Now, are we seeing, that maybe these sellers are starting to wear out a bit? Well, they could be, because what are we seeing now on the chart? We're seeing another type of divergence, right? Where this is pulling back and this is going forward. So that's a bearish divergence. It's saying, hey, this has really had quite a nice run. Again, if we click on this and move to the upside, this has moved up 66% in the last 50 trading days. So, that's a really tremendous move to the upside. And what this might be telling us is, hey, this stock is now ready to take a breath, or it could end up pulling back a bit. Oh, yeah. So MBH, and you're absolutely right. So this is light green because each of these candles is higher than the day before. It's dark green if it's still above our signal line, but closing lower than the day before. So here it closed lower, closed higher, closed lower. And it's the same thing with the red. So it's bright red if it closed lower than the day before, dark red if it closed higher, but was still below the signal line. As soon as you pointed it out, it's like a blinding glimpse of the obvious, right? Right. Okay, so let's look at one more, and then let's look at one where we might choose to place a trade. So Roku, and again, like right now, we see this stock is moving to the upside on the chart. And then if you look down here and say, hey, does the MACD agree that momentum is on this stock side? It's going, yeah, not so much. So here's a bearish divergence. The stock is moving bullishly, but the momentum indicator is saying, yeah, the buyers may be starting to run out of gas. Now, does this mean for sure that Roku is going to pull back? Yeah, there are no for sures. Okay, it's showing a lack of strength in the trend continuation. Okay. Okay, so yeah, it's my drawing tool, that this third-party drawing tool that's giving me grief. It's not the Thinkorswim platform. It's my little handy dandy drawing tool. So with CRM, like we have a couple of divergences here. So back from March to April, the stock was falling, but this momentum indicator said you may want to keep your eye on this. This downtrend may be running out of steam. And in fact, it did start moving to the upside. And then we saw it kind of pull back here, right? And consolidate. And yet, what this is saying from here to here, like this, if I come up to here, just looking at, let me again bring up my drawing tool. If we're looking at this wedge here, this is saying, hey, it's been consolidating and this is moving, similar lows, yet we're seeing higher lows here on the MACD. And so could we use this as an opportunity if we wanted to yeah, I'd like to make a little money. I think if this is going to continue sideways, I could sell a short, put vertical. Or I could just sell a put. Or maybe you want to add this. See my drawing tool. You can see the way there we go. Dang, I'm going to have to reload that thing. Okay, so, and if we wanted to do that, where might we put our strikes? Well, we might say, let's see if we could sell something around the 250 mark. And so we'd come to our trade tab, maybe come out to July here, say, we'd like to sell the 250. We want to look for opportunities where the stock trades more than 1 million shares a day. We want there to be a lot of volume on the options, which there is. We want there to be a narrow bid-ask spread, which there is. It's certainly under 10%. And say, could we sell the 250 and buy the 240? And we get $1.80 for that. and or $180 a contract. And what are we risking? Well, we're risking $8.20, or the difference between the strike. So if you said, well, I could make 180 and I'm risking 820, I'd get 22%, of potentially a 22% return for a trade at July 18th. I'd be in it for 31 days. So you might say, you know what? My rule is if I'm in it for 30 days, I want at least a 30% return. So in spite of the fact that I see this divergence for this particular trade, there isn't enough premium in it for it to be worth my while. And so you might say, well, I'm just not going to place that trade then. But you might be interested in acquiring the stock. Now, today it's down, it's not down by much, 87 cents on a $263 stock. But this is where you might want to come and read some news on this company and see what happened at the last earnings announcement and all of that good stuff. And so, I don't want to assume that people really understand options well, that getting started with options classes there. But let's look at a couple of stocks where they're already in our portfolio. And we did one on TSM. So we bought this stock, and let's just come out and see. So it's a stock where we had a target on it. And when did we buy it? We bought it on June 3rd. So we didn't buy it too long ago. June 3rd, on this day right here. So we bought it on this day right here. And we had a target of 225. And this is what we're going to talk about in a week or two, where we were showing how you could place a target based on something called a Fibonacci extension, where we clicked at the, it moved. It's this inverted head and shoulders pattern. So if you're new to technical analysis, let me just draw that on the chart. Because once you see it, it's kind of like that blinding glimpse of the obvious, right? So it's an upside down face or ghost. We call it an inverted head and shoulders. And so some might say, well, I'm going to measure from 134 to 183. And you may have put your target based on that. So, that's about a 50-point range, and said, okay, I'm going to make my target 183 plus 50. So that would be, 233. Another way you could try and come up with a target, if you wanted to use a target, would be to say, I'm going to start here from my resistance level, and I'm going to draw down to the bottom, and I'm going to make my target based on the 161 extension, in which case we've hit our target range. And this 161 extension is a target that traders will sometimes use. And so this was probably based on the width of the channel, and then we knocked a few dollars off. But if we're coming for confirmation and we look at this, we could say, well, hey, we're at this particular target. So I think I'd like to take the money and run. And what might else incent us to do that? Well, if we look at our MACD, we now have a divergence because, from here, whoops, I need to change my drawing tool again. Let me get rid of that. We have this stock that's been going up, but the MACD is saying that the buyers could be running out of steam. And then today we have this candle pattern that is saying, this could be a potential ceiling and we could be about to pull back. So when we look at our monitor tab for this on TSM, We are up by $1,600 on our 100 shares. We bought it at $197.71. It's now trading at $213. And so we did have a stop loss on this, but we could come and say, you know what? I'm just going to throw out this whole order that had our target and our exit. I'm going to cancel that whole group. And based on what I'm seeing technically on the chart with that divergence, I think I'm going to take the money and run. Cue the Steve Miller Band, right? And so I'm going to come here, and how do I create a closing order? I'm going to come up here and say, I just want to sell, because this $1,623 that we are up, that's an unrealized gain. And what the market giveth, the market can taketh away, right? Yeah. So confirm and send. Now, and that was a stock with a target. Now we have a couple of others in here. Here's Snow. We're up $1,700 on Snow. And you'll see here, I don't have a profit and loss percentage. So if I want to add that, I'm just going to type in P/L and add that. And like I said, in that trade management mini sessions, there's a whole series of things. And the other thing with stocks, I kind of like to know how much money I have invested. So this net lick is the net liquidating value. So I can add that to my chart as well. And so with Snow here, we're up almost 9%. When did we buy this? You can click view trades, February 13th. So we've had Snow for a while. So if we come back, here's January. So we thought it was breaking out, and then it got the stuffing kicked out of it. So we bought it back here, and it came all the way back down. So it came back down, and it is now broken out. But what are we seeing on our MACD? What we're seeing is something that has had this tremendous run to the upside. But when I look at the MACD, it's been kind of starting to pull back. So we might say, you know what? I have a nice little gain here. I think I'd like to take it. And someone's saying, you know, can we use a trailing stop? Absolutely, we could. And we've demonstrated that quite often in our trading a smaller account class when we've done short-term targets. The most recent one where we used that was with an example trade on Meta. And so here's our Snow trade. And again, this is taking our unrealized gain and turning it into a realized gain. And so we don't have an exit in place on this. I know, because there's no little chiclet beside it. We could also come up to our working orders, sort them by symbol, and just make sure that it didn't end up in the wrong spot. So we have no order on that. So we're going to come back down here and say, you know, because I'm now seeing this divergence, I'm going to just create a closing order, and I'm going to choose to exit that position. Now, we also have a position, and so this is how we can, you know, when we're looking at our positions, like, so here's Celsius Holdings. We're up 21% on that. An unrealized gain of $1,584. We bought it for 36. It's now trading at 44. So let's come and look at Celsius. And so if I just clear everything off, and we've traded this stock a lot in our paper money account for trading a smaller account. But what we're seeing, and let's just come in a little more up close and personal, as I like to say, are we seeing a divergence? Like if we go from here, this has been basically uptrending, and this is uptrending. So does this mean we should, exit the position? It's hitting a high. No, but someone said, you know what, you may want to change your stop if you have a stop on it. And, this 30-day moving average, well, it's kind of come below. But we could take this line and say, hey, or we could say, gee, this was a recent low here at $40.41. We could put a stop, 5% below that, 41 times 0.95. We could make our stop $38.38. And when did we buy this one? And again, we can see when we bought it by right-clicking, coming down to view trade. So we bought this April 1st. So despite the date, it looks like we were no fools. Where's April 1st? Right here. So we bought it on this date. And so if we looked at that and said, well, would 38.38, would we be comfortable, getting out at that price here? If I edit this, make it 38.38. And so, sometimes the lack of a divergence can give us, information with which to make a decision also. And so that certainly gives it room to continue moving to the upside. If we're stopped out, we'd have protected some of our profit. And, we've been selling covered calls on this position as well, but we have 200 shares. So, we'd have given back a lot of this profit. Now, the other thing we could do is say, hey, if it continues to go up, we could put in a different type of exit, but we have no exit at all on this right now. And so we might say, okay, well, to put our stop on, we're going to come here, we're going to right click, create a closing order with a stop, and make it 38.38. So Vicky is saying, is there a way to track how much this position has since it was originally acquired? Well, one thing you can do, we can come back in time up to 370 days on a particular stock. So I can come in here and say, just show me everything we've done with Celsius Holdings, and it's saying for the last 100 days, we could go back. Well, I wiped this slate clean at the beginning of the year, so there won't be anything back last year. So this is what we've done with this stock in this account. Now, I have another account for our trading a smaller account. And for that one, we've done, a whole bunch of trades. We've been selling covered calls on it. Okay. So, this platform is functionally very rich, but to be upfront with you, I'm a coach. I started back in 2011 as a client, in 2016 as a coach, and I probably only use 5% of what's available to me on this platform. So it's like going to a world-class gym. It can be intimidating when you first walk up the stairs and you see like what looks like miles of cardio equipment and all these weights and yoga studios and, all this other stuff. But you could probably use a very small fraction of what's available to you in that gym and hit every fitness target you've ever dreamed of. And the Thinkorswim platform is like that as well. Okay. So I hope this has been helpful to you in both looking at how you might choose to place a new trade and how you might use it to manage positions that are currently in your portfolio. Like I said, next week, I'm going to talk about the 7 things I wish I had known when I started in the world of trading and investing. So I hope you'll come back for that. And the week after, we're going to talk about that Fibonacci a pattern. And I did teach a class dedicated to that. So somebody asked if I would show something again, but you can go to that playlist. And so just as we wrap things up, don't forget to hit the like button. What that does is it moves this up in the trading algorithms so that within YouTube, so that more people can find this content. Also, there's a survey in the chat. And so my ask is one for Ben to repost it one last time because my highlight click doesn't appear to be working. But there's 2 questions. 1, I hated it. 10, I loved it, and everything in between. Plus, you can put comments in. So let me know topics you'd like to see in upcoming classes, that kind of thing. So yeah, if you'd fill out the survey, that'd be great. Hit the like button. Subscribe to the channel, and then don't forget to follow Mr. Watson and I in the land of X, Ben Watson CS and Barb Armstrong CS. Have a really awesome rest of your day. Up next is Swing Trading with Mike Fairborn. Take care, everyone. Bye for now.